Hey everyone, this is DayTraderRockStar, and this is the market radar for May 20th, Tuesday, May 20th, 2014. I'm going to get right into it. Going to make a pretty big call on where I see this market going in the short term, at least this week. The 60-minute time frame was the big key again this week, and it continues to be a good timing indicator. Each 60-minute oversold level kind of was followed up by a nice little move. In some cases, you get a little further move down. This area right here, which represents a pretty steep sell-off, and you could see that, you could see that in the overall markets, and that was the day that one of I think it was David Tepper, one of the hedge fund guys, were making comments, not aggressively negative on the market, but more of a slight-handed remark, or a kind of a hidden remark here, talking about not being too long the market, and it kind of spooked people. The market came down here pretty hard. We blew through some levels. We see this type of selling across the board, so that that kind of tells me also that it was a news-driven event, and we kind of broke down. But we kind of got through that, and the 60-minute chart, 60-minute time frame started rotating back up. And even though we did get a nice rotation, and we didn't really take off until Friday, and then today we got a little bit of follow through. So Friday was a nice little pop, and it ripped at the end of the day. So we're extended here, and again, let's just close this out by saying we're extended, we're embedded, and embedded stochastics to the downside here shows you more weakness. Embedded stochastics to the upside here shows you some more strength coming up here. And you see this up here, how we kind of stayed up in this level for multiple time frames. Each candle represents one time frame. So this is a 60-minute bar, represents 60 minutes. The stochastic, embedded stochastic, is going to develop when you get your stochastics pressed up either to an overbought or an oversold level, and it stays up there for 3 of those time frames. So it's on the 5-minute chart. You look for the 5 candles on the, 3 candles. On the 60-minute chart, you're still going to look for those 3 time frames to kind of, and then from that point on, you're looking at possible more strength. So, you kind of gauge it, you kind of guesstimate it. You can tell if it starts to get embedded. You'll start to know there's a big difference between this one just rotating up, rotating back down, rotating up, to staying a little embedded, and then you can see the resulting strength. So we had this little kind of smack down here, and we kind of pulled back a little because of news, and now rotated back up. Now we're back into overbought levels, but we're starting to get embedded. So I would say the last 3 candles really kind of showed that we're holding good strength. And if we look at this now on the futures and take a look at the daily, we have this underlying trend line we broke down through. We're pushing back up into that, and that's our first area. The daily stochastics here, they were kind of negative, and the big thing here is this lane divergence. The lane divergence really shows you an early read on momentum shifting from a positive shift to a negative shift. We had a high here, and we had a higher high, and the stochastics here kind of rotated back down, making a lower high on that. So it's not a tremendous difference between this high and this high, but there is that divergence. So we're seeing if this is actually going to play out to the downside. I'm going to say it is. And what I normally notice is when we do make a top or a high, the market just doesn't reverse. It'll break down. It'll take out some technical levels. It'll go back up there and test out those levels, and you want to see it fail. And this is what can happen. So if you take a look at Etna, which is a great lane divergence on the downside, you see this drift down here, the crossover, back up, but a failure to regain those highs. But the price made new highs, and that was the key. When you see that final crossover, that really kind of tops out that market, and you could consider that to be like your safety zone, your stop out. And what happens is, you can start to see us either maintain this, this slope. We kind of push back up here. This little push is that retest, and then the failure. All right, so that's what we're looking to see if the market's going to prepare itself to do. And we consider this part that's happening right now as the retest. We haven't gone to cross back over. We haven't pushed up against the trend line. We're not 100% sure where the top is going to be, and that's where I'm coming in right now to tell you that I'm looking for a further move up. Here's that underlying trend line that was definitely identified on Wednesday through Friday. And there's a couple good pivot areas here. And we also have two little pivot areas back here on Tuesday and Wednesday, which I'm watching. These all intersect right around the 88 level. There's also an FT71 profile line up here. So this area becomes very, very interesting. So considering the 60 minutes embedded, all right, that we should get a little more strength, and then we're going to kind of rotate back down. This would be would be a nice extreme level. I would like to take that short in this area, and either take it again. I also want to get an overbought level on the tradeometer into this level, and preferably we get the Algo X setting up too. So watching this 88 level, give or take a point, but this is the level I'm looking for, and maybe a possible move there tomorrow. And then from that point on, we're going to see if we actually blow through this, we hold it, if we start to, I just want to take a shot on that. I think it's a good short on, the futures or something that tracks the market here. Individual stocks, they're set up on their own, and we're doing great with those. I mean, I think we're in some quality names. They're going to look really good. So we're going to continue to follow those day by day and just take profits where we need to. But right now, we're looking at the S&P. And again, I want to say that we have, this is my radar. Radar is we're going to move up to that 88 level, and then the possibility of seeing some selling coming in. Do we end positive? Do we end negative? Basically, this is what I'm calling. I'm looking at an 88 level to be a short-term target. From that point on, if we see selling, I wouldn't be surprised. It's so hard to call the overall action. Are we going to end positive, negative? But if we start to see this level, give it in, then I'd be more apt to start looking for some shorts and taking some things off the table. As this divergence might be playing out to the downside. This might be the best shorting opportunity you have coming up. So we'll leave it at that. We have great stocks. Those are all listed on the HPS watch list. So definitely review those. And again, tomorrow another market on a Tuesday. Again, like to see that 88 level. We'll see what happens there. I wouldn't be surprised to see it turn over there. And if I do see that turnover, we're going to start acting on it. I think that could be a short-term top in the market. All right. Have a great evening, everyone. I'll see you tomorrow.